Hi everyone, today I'm going to talk about how Bitcoin hodlers are the revolutionaries, how they enable Bitcoin to succeed. They're not just folks who buy Bitcoin. In fact, they totally support the network, and that's why hodling is such a thing. Okay, so I'm going to give you the history of that, but before I begin, I want to give a shout out to Ledin. Ledin is one of my sponsors. With Ledin, you can get a crypto mortgage, so you can borrow against your crypto using it as collateral and get a mortgage, or you can borrow and use that for a loan for anything you need to buy a car, something else. Caveat, there are risks that come with that. Definitely take the time to learn about how margin works and how borrowing against your Bitcoin can go badly. Okay, with that being said, let's go ahead and jump on into the video for today. So I first write this in the Held Report, my newsletter. The newsletter link is right here, so if you want to subscribe, go check that out. And with that being said, let's talk about it. So what are hodlers? So the term hodl, by the way, came from this drunken guy on the Bitcoin Talk forums who drunkenly said, hey, I'm not very good at buying low and selling high, so I'm just going to hodl. And he meant to say hold, and he misspelled it. That's the origin of it. But since then, it's took on a like cultural phenomenon where people believe that hodling is this kind of core aspect of Bitcoin, and they couldn't be more right. So the purpose of this is to reflect on the important role that hodlers play in Bitcoin's network. And so, as Mark Twain says, in the beginning of a change, a patriot is a scarce man and brave and hated and scorned. When his cause succeeds, the timid join him, for then it costs nothing to be a patriot. So Satoshi planted or published the Bitcoin white paper on October 31st, 2008, 1 month after the collapse of Lehman Brothers. This was a huge deal. I mean, Bitcoin was incepted at the absolute time of necessity. Now, Satoshi knew it was going to take a long time for it to succeed, but he definitely wanted to kind of make a statement. Trust had been lost in this world that ran on trust. And when Satoshi planted Bitcoin, financial crisis as a keyword term being searched on Google queries spiked. That was kind of peak fear in the market. And so Satoshi says the root problem that he's solving for here, the root problem with conventional currency is all the trust that's required to make it work. The central bank must be trusted not to debase the currency, but the history of fiat currency is full of breaches of that trust. Banks must be trusted to hold our money and transfer it electronically, but they lend it out in waves of credit bubbles with barely a fraction of reserve. So Satoshi is highlighting the problem here. It's all about trust. And through intervention by central banks during the financial crisis, markets became incredibly distorted, with risk-reward the most skewed it's ever been in history. And what is unique about this time period is that in all of observable history, never have we seen so many countries in debt and have had such long periods without sustainable surpluses. For example, the U.S. has now run a deficit for 40 of the last 44 years. This is a couple years dated, though, this information, so that's pretty wild. And if we look at the debt to GDP ratio, this was made a few years ago. It's super high now due to COVID and money printer go burr. And so prior to the 20th century, ordinary people would always flock to gold to protect themselves against the failed inflationist policies of the central bank. So, and then in the early 20th century, gold was outlawed. And then never have we seen in all human history this many companies move off of a metal standard or precious metal type currency for so long. Coming off the gold standard in 1971 helped create the conditions for almost unlimited credit creation, which would have been inconceivable in all recorded human financial history. We are truly in a very, very unique spot. And so these charts here are from a research report put together by Deutsche Bank called A Journey into the Unknown, a long-term asset management study where they looked at financial history as far back as they could go. And so when we look at, for example, here's since 1200 AD inflation rates, and then you've got the creation of the Fed right here. This is huge. This massive amount of inflation occurred after the Fed was created. By the way, that's a log scale on the left. So these are magnitudes of 10, which is insane. And then you look at the Fed creation, World War I, German hyperinflation, World War II, and then when the U.S. suspends gold convertibility, that's when the U.S. went fully off the gold standard. And then when we look at bond yields of sovereign debt, like the Netherlands have one of the oldest, sovereign bonds available. We've never seen interest rates this low. And these rates went lower, by the way, since these charts were created. And what does that mean? That means that people are perceiving that there's less risk than ever before in human history with the most amount of debt and most inflation ever, which is totally wrong. So Satoshi's seen this world change. He develops Bitcoin to solve this problem. Now he needs some people to believe in it, the hodlers. These are the people that believe in the new financial system. They believe that, when you look at the financial system, in The Big Short, there's a quote that says, over and over again, the financial system was in some narrow way discredited, but the rebellion by American youth against the money culture never happened. Bitcoin is that rebellion, is that revolution against that culture. And Satoshi built Bitcoin for the believers in this new financial system, the HODLers, the revolutionaries, the ones who were disenfranchised with the existing financial system, the ones that were attracted to something risky and wanted to make a big change. Satoshi says, what I love about this quote is he came up with this before Bitcoin is worth a penny. He says, in this sense, it's more typical of a precious metal. Instead of the supply changing to keep the value the same, the supply is predetermined and the value changes. As the number of users grows, the value per coin increases. It has a potential for a positive feedback loop. As users increase, the value goes up, which could attract more users to take advantage of the increasing value. So Satoshi needed to bootstrap the network with an incentive mechanism, which was due to the issuance schedule. So more coins were issued in the beginning versus later on. So if you were earlier on, you could get access to more coins. Now, of course, you can buy or mine coins. Either way, it's the same, basically the same amount of cost. But essentially, it rewarded earlier participants rather than the latter ones. And so Bias A. Huber has a great quote here. HODLing bootstrapped Bitcoin into existence. HODLing increases value, which increases demand, which increases hash rate, network security, and that also attracts new HODLers and devs, in this self-reinforcing loop drives Bitcoin's network effect, security, and value. That's the core root of HODLing here. It is this network effect driven by people believing in it that makes Bitcoin secure, makes it popular, and overwhelmingly is why new products and services are created. Bitcoiners are the ultimate practitioners of skin in the game. As Nassim Taleb puts it, don't tell me what you think, show me your portfolio. And so what's really cool is that Bitcoin represents this entirely new system. And there's a great quote here by Willem Vandenberg that I don't really go fully into, but essentially it's the idea that by hodling Bitcoin, the price per unit increases. The more people hold Bitcoin in the long run, the more volatility drops. This convergence towards a stable increase in price makes Bitcoin more attractive to new audiences, creating a feedback loop. So there's sort of this virality baked into Bitcoin. As the price goes higher, people become more aware of it and then buy in anticipation of it going higher, and that creates its own organic feedback loop of user acquisition. VJ has a great quote here where he says, slowly but surely, Bitcoin creeps further and further into the psyche of those in charge. So Bitcoin takes a long time to come into existence. It's not like people just hear about it immediately and they go, oh, cool, I'm going to drop everything and go buy this coin. It's usually repeat exposure, people hearing about Bitcoin over and over and over again, and that's what changes their behavior. Naval says, as protocols die when they run out of believers. And so the faith in a new financial system, what binds everything together. Bitcoin isn't just a software project. It's a method of coordinating a large group of people who face powerful fiat, government agencies. And Bitcoin isn't this technological breakthrough. It's also a social one, because the group can come together and make changes to the protocol, but Bitcoin's governance and its social cohesiveness is all about not being able to make those changes easily. And so I think, to kind of finish out here, by owning Bitcoin, you kind of become the central bank, the backbone of the financial system. HODLing isn't just trying to find another sucker or buyer at a higher price someday, because if hyper-Bitcoinization or Bitcoin becoming the world reserve currency happens, you'll never have to sell. You can either lend or borrow against your Bitcoin, or everyone is transacting it and it has become the de facto money, and you don't sell it as an investment. You're like, cool, I'm holding Bitcoin like I hold dollars. This capital market, the capital markets were rebuilt by the HODLers. The annual rate of return on your Bitcoin is the risk-free rate, with additional layers of return per unit of risk. So there's some things like the Lightning Network reference rate are a great example of that, and then also classic lending and borrowing. So, to really hammer home here what Bitcoin represents as a revolution, Bitcoin promises an alternative for citizens across the world to keep their savings in a form of money that can neither be confiscated nor diluted. If Bitcoin grows much larger, it may force governments to become a voluntary organization. It removes power from the government. Through HODLing, we might finally be free. We may finally be free from all governments. Those who opt into Bitcoin, essentially the red pill, are trading something abundant for something scarce, trading the past for the future, and trading financial dependence for financial sovereignty. That's what it means to be a HODLer. It's a revolution, and that's what Bitcoin is all about. Hope you enjoyed. If you'd like this, please give me a subscribe or a comment. Helps with the algorithm, helps get this out with more people. Hope you enjoyed. Cheers.